Welcome back. Well, the market's a little bit lower. That's the headline index, but the mid-cap index still doing a relative outperformance, trading more or less flattish as we speak. Let's get straight to our next management. Bajaj Electricals, that's the next corporate on our radar. Remember, the company has a high amount of exposure to rural India, twice their competitors. Now, in a move to push premiumization, that's what's going to help their margins going ahead. To discuss the outlook and to understand how business is shaping up, we're joined by Mr. Anuj Poddar, the Managing Director and Chief Executive Officer at the company. Hi, Anuj. Always good speaking to you. Thanks so much for joining in. Well, I recall the last chat that we had. You were telling us about your rural exposure, but you also believe that we are on the cusp of a turnaround in the rural market, going by the data points that we had. Is that happening? We spoke a month or so ago. Are we headed towards a rural economy recovery? If you could tell us how you're seeing evidence on ground.
Yes. Good morning. Thanks for having me. Firstly, let me start with wishing you and the CNBC team on your 23 years completion. That's a long time, right? Yeah. But as Bajaj, I'll just say we have a little longer history to that. Yeah. Coming straight to your question on the rural, I think we are a little time away. And for us, what we're clearly watching very closely is the FMCG space and all the commentary from that. I think they will be the first litmus test for the bounce back of the rural economy. Just last week, we were in a CII council session tracking some of the primary data on this. I think we're starting to see the early, the input data in terms of the crop sowing, some of the economic indicators there, but that has yet to translate to real demand or purchasing happening in the rural segment.
Mr. Poddar, hi, good morning. By when do you start to see, in a typical kind of cycle, by when do you start to see the full impact of the sowing and Rabi crop impact coming through? I mean, do you have to wait all the way till Jan?
Yeah. No, so I think it's not just a crop sowing, but just coming back of, we are coming in from a high inflation environment. So as that starts to stabilize, which I think it is, and as people start seeing more cash available to start spending, so I think there is a little time to go. I think Jan is a little early. We may be a quarter out to start seeing that actual purchasing at least come into our sector. And that's why I said the first indicator I really look for is the FMCG. Are they starting to see volume traction in the sabun, tail, shampoo, etc.? That will be a good indicator for us.
Anuj, hi, good morning, and thank you for your message on our 23rd anniversary. Thanks a lot, appreciate it. Wanted your thoughts a little bit on the export growth as well, because I was reading a report which suggested that from 2% of your total business, which exports is hardly anything now, you plan to grow it to 10 to 15% by 2030, and over the next 3 to 5 years, about more than 5%. How is the situation now in terms of exports, and what's the kind of annual run rate that you're looking at?
So Sonia, I always separate the current tactical or environmental issues from the long-term strategic directional sense. Last 2 years, we've had good traction. We were, about 40 odd crores. We crossed about 75 crores last year. This year, target was about 125 crores. That said, this year has been difficult because of the geopolitical issues and the currency devaluation, not so much in India, which should help us, but currency devaluation in most other export markets of ours versus India. But that's what I put in the bucket of tactical short-term issues there. I think strategically long-term, we are looking at exports as a growth area for us. And that's why that guidance, that 2% should go up to 5% and go all the way up to about 10% by 2030. What we're using this period for is really expanding our relationships in terms of channels or distribution relationships across some of these markets, so that as and when the markets start to bounce back in terms of purchasing, we're well entrenched there. And long-term directionally, while today it seems like a very small amount, as we focus on growth there, it should start becoming a more meaningful revenue stream for us over the next 3 to 5 to 7 years.
Okay, all right. Anuj, let's focus on the fans division. And you have been speaking about premiumization numerous times. I believe premium fans as a percentage of your sales has moved to the high teens. They used to be in the mid-single digits. So as a contribution of your total revenue, where do you see this number headed? That's premium fans. And also give us an updated number about your market share in the fans division.
Yeah, so, in terms of our contribution from premium fans, it used to be very low at about 6%. Yes. Today, that's up to about 19%. So that's really a reflection of how we've been focusing on that segment based on new product launching, exactly. I don't have a particular number, but let's say that 19% hopefully should go up to 30% in a couple of years if I were to hazard a guess on that one. But directionally, that is what we want to do. Start having a more optimal product mix in fans and across the board as a brand. We can talk about that from a brand journey also that we're looking at.
Okay.
Going forward, in terms of our own market share in the category, we focus on rank because the market shares tend to be slightly inaccurate. We used to be a number 6, number 7 player. Today we are close to a top 4 player. And over the next couple of years, we would expect to continue to increase our rank in the fans category.
So overall, what would this mean for your revenue growth? In the first half of the year, you've done a little under 2,500 crores, which is a growth of 14%. For the second half, what are you targeting?
Sonia, I heard Rajesh mention in the previous session about your ability to ask us these probing questions, right? No, so I don't have a particular number to put out. It does depend on the market dynamics. But we're very focused in this Q3 and Q4 also on looking at our margins. So, while the top line is a function of many aspects in the market demand offtake, we are coming in from a low margin environment. But that is something you will see, hopefully, good growth over the next couple of quarters.
So when you say good growth in margins, I mean, you're still at sort of high single digits, around 7-8%. Is there a possibility of getting back to double digits now that raw material prices have come off?
So I think double digits we'll have to wait for about 18 months. Okay. We should keep expanding our margin. Therefore, on an absolute basis, hopefully we should grow our margins.
Okay, all right. And final question, that timeline for the demerger, Q4, right? Sometime in February that should take shape?
That's right. So we've just received our SEBI NOC a couple of days ago, and we're in the process of filing for NCLT. We'd expect that to happen anywhere between 3 to 4 months if it takes a little longer.
All right.
We're very much on track with that, and we are fully geared up for that.
Okay, fair enough. By the way, just to kind of tie this up, Anuj's conversation, you began by saying at a conference you were seeing FMCG companies, etc., indicating that things are picking up, looking up. That's what you started with, right? So, and that's the early indication for you.
Economic indicators are starting to look positive, and that should translate to demand for FMCG, hopefully, very soon.
All right, thank you. Thank you for that, and hopefully that'll be the case. Appreciate your time here on CBC TV 18. That's Anuj Poddar at Bajaj Electricals.